Hey folks, welcome back to the Asymmetric Trading System Weekly Review. This is our weekly review for April the 19th through April the 23rd. All right, so let's get into it, guys. This past week was just absolutely stellar. Just absolutely stellar. From the dual mandate that we have, which is not only to obviously make money and hopefully beat the market, but do it with less risk, less volatility. And so if you look at the start of last week, which was the 19th, I believe, if I'm looking at my correct dates here, you can see that we had 1, 2, 3, 4, 5. There's our last week's trading period right in there. And it doesn't really look like too big of a deal here. Yeah, we had a couple of down days in the marketplace, and then we had a little bit of back and forth, and we were able to really recover most of that by Friday and actually finish pretty much, if you can see that, flat on the week. But what these candles really belie, folks, is the volatility that the market had in this past week. And we'll look at that here in just a second. You can take a look at what the market did, and you can see that there was several days of tremendous volatility. Even on the 19th, on a Monday, a half a point move, 0.5% move in one day is pretty big. And then we had several days that were almost 1% moves on the day. A whole ton of volatility for the entire trading week in the marketplace. And we ended up down in the marketplace of 13/100ths of 1% is what we were down in the marketplace. So the market finished basically just a little bit off for the week. Not a big loss, but it was a loss. 3 of the 5 days were down days. So the market had 3 days of losers, 2 days of winners. In the AST system, in the asymmetric trading system, we had 2 days that were down and 3 days that were up. So we actually just inverted that. We had a little bit better ratio from a win-loss standpoint than the market did. But the big thing is, rather than being down 13/100ths of a percent, we were up 1/100ths of a percent in our account. My account actually went from $35,051, so $35,051 to $35,337. But here's the real key. We did this. We beat the market last week with 74% less risk, 74% less volatility in the marketplace. So I absolutely, guys, I just could not be any happier with our results from last week. As we look at our open positions here starting the week of April 26th now, you can see that we have our anchor position in the SPY still working. A lot of protection in this position. We are safe. SPY right now is around 416, and we're safe all the way down to 408. So a lot of downside protection in this. That is a core position that we have. I've got EQT, which is a bracketed order that is still in place and still working. We've got our silver order, which is a anchor position as well, and that's working quite well for us. We've got a covered position there at 2450, so still a little bit of upside in there, but also some nice theta and extrinsic value working as well. Got another bracket order still working. That's SMED, and that is working quite well. You can see it's got a nice profit in there right now, and it's very close. You can see that it's very close. It almost touched on Friday. Well, it actually did touch both on Thursday and Friday. Our 3% profit exit, but didn't quite trigger, didn't quite get there, but still working in our favor. We have LU, which is another bracket order, which is very similar. If you take a look at it, you can see that that's sitting right up on that 3% take profit level. And so very, very close to being exited there as well. Another core position is our RWM. Now, RWM has hurt us a little bit here lately as the market has, again, pushed to these all-time highs. But if we look at the inverse of RWM, which is IWM, which is the Russell, it's the Russell 2000, and we look at it in a charting standpoint, let's pull it in here just a little bit more, get a little bit bigger view of it, if you will. And you can see that even though the SPX, there's the S&P 500 right here, has really pushed once again to these all-time highs, that we're not really seeing that in the Russell. And so we continue to hold our position here in the short, basically, version of the Russell in anticipation, again, of some further weakness here. And so that's what the RWM is. It's the inverse of the IWM. It makes money when the Russell goes down. We've got a covered position on that with a lot of extrinsic value and a lot of upside potential still left in this. This is something that we may take advantage of in the next couple of days and maybe roll down and get a little bit more premium on it. And then last but not least, we have our core position in IYR, which is, of course, the real estate ETF that we've had so much success in lately. We're covered there at 95.50, and it's at 98.20 now. So we have some income potential still left in this trade. You can see $42 of income potential still left in the trade, but also some much needed, I think, downside protection in this as well, because the IYR has absolutely just run through the roof. And we do anticipate at some point that we'll have a little bit of a pullback here, maybe down to the 10-period moving average, which would put us back around the $96 level. So everything is clicking along quite nicely with our overall positions, folks. We continue to, again, fight that battle, which is a big battle. Let's be very clear that it is a big battle when you are setting a goal to keep pace with something that is trading like this. This is just absolutely just unbelievable how big of a push we have had here at these all-time highs with the marketplace. I think if we look at last month's results, for example, we could come in here and we could look at, let's go look at the whole month of April so far, and we can kind of see where the market is in terms of overall results. And you can see that the market's up 5% so far for the month. You know, if you annualize that out, that's over 60% a year. We know that this is not sustainable. We know that the market is not going to make 60% rates of return on a yearly basis. So we're in this bull market right now, which does create some challenges for us when we are trying to keep pace with it at a much lower risk level. But we're doing a good job on both. We're doing a good job on either staying with the market or outpacing the market. We're doing an amazing job on keeping the volatility and the risk very, very low. So there's your review, guys, for last week. Hopefully we have just as good a week this week coming up as we start again April 26th. Today is Monday. So have a awesome trading day today, guys. We'll talk to you once again next week as we give you our weekly reviews.